Hello and welcome, and thank you for joining me today. My name is Ellie Burns and I am a product marketing specialist at LexisNexis Risk Solutions, specialising in fraud and identity. And today I'm really excited to be here to share with you the very latest findings from our cybercrime report from the first half of this year. So let's have a quick look at the agenda. I want to give you a brief overview of the cybercrime report to begin with, how we put it together. I'll then dive into the report overview, looking at global highlights, then looking at trends across the customer journey, as well as by industry and region. I then want to take you through some of the COVID-19 analysis specifically, before finishing up with a roundup of where we see things going in the next 6 months. So let's start by looking at the report itself. And I'm guessing the majority of today's audience hasn't seen the report before, so I thought it would be helpful to give you a few notes on the methodology of how we put the cybercrime report together. So we publish this twice yearly in March and September, and we are analysing transaction and attack patterns from billions of global online transactions across all of our global customers. The data from these transactions forms the basis of our digital identity network, which is essentially a repository of crowdsourced, tokenized data from our entire customer base. Using this intelligence, we are able to build up reliable digital identities of every online user as they transact across locations, devices, and digital businesses. And what this really helps our customers to do is to better distinguish between whether our transaction is coming from a trusted user or is a potential threat, and really to share that intelligence relating to trust and risk from other organisations from within our network. So for the purposes of the report, we are using these transactions to analyse patterns and attack trends globally, regionally, by industry, and at an individual business level. The key industries we cover include financial services, e-commerce, and media. And of course, as you know, within those there are many subsets: fintechs, telcos, airlines, ride-sharing sites, insurance companies, payments, and so on. And as I mentioned, for the purposes of today, I will be focusing largely on financial services. But if you are interested in reading the broader context of fraud across other industries, please do read the full report, which will be made available to you. So the theme for our latest report is the changing face of cybercrime. And during this period, we analysed 22.5 billion transactions. So we feel that the trends that we see are pretty representative of global trends. Okay, so now let's deep dive into the report. So I'd like to start by setting the scene with some key changes in the world of cybercrime, as well as specifically within the LexisNexis Digital Identity Network between January and June of this year. And my purpose really is to ground some of the cliches and stock phrases that we've heard so much in the first half of this year, and actually analyse some of the facts of what is consistent and what has changed in the world of cybercrime. And what is certainly true is that fraudsters are continuing to attack, and in some cases at a higher rate than 2019. And this is corroborated by the fact that the FBI's Internet Crime Centre received almost as many fraud reports by May 2020 as for the whole of 2019. And we can also cite many global news reports about exploitation of COVID-19 related support packages, whether via fraud against government social benefits packages or loans administered through banks. Likewise, there's evidence that mule activity is increasing as economic uncertainty prompts a wave of either knowing or unwitting mule recruits looking to make a fast dollar. But actually, in our network, we recorded overall decline in human-initiated attacks during the period. And the reason for these are complex, but likely boil down to two key things. Firstly, the growth in consumer traffic has largely come from good, trusted customers, so attack rates overall are down. And secondly, the network is affording our customers that are a part of it great protection against the effects of cybercrime. it's likely that fraudsters are seeing easier targets elsewhere, and probably some of these new stimulus packages are seen as really rich pickings. Having said that, it's interesting because automated bot traffic, particularly targeting financial services, is up. Mass attacks are clearly the attack method of choice during this period. And while overall attacks were down, the media industry nevertheless recorded a small growth in attack rate. So this industry really remains the testing ground for key attacks, with generally lower barriers to entry and less robust security protocols. Okay, so let's begin with the global findings. Transactions across our network have grown overall by 37% year on year, and we will look a little bit later about how the growth and decline breaks down across sub-industries affected by COVID-19. But overall, e-commerce has seen the biggest growth in transactions during the period, likely fueled in large part by a shift to digital transacting during lockdown. And if we look at transactions split by desktop and mobile, we can see the majority, around 2/3, now come from a mobile. And this percentage continues to grow 6% year on year. It's interesting because we do truly live in a mobile first world now, whereas back in 2015, when we first started this report, only around 20% of network traffic came from a mobile. So it's clear just how pivotal mobile transacting has become globally, and likely facilitating underbanked populations as well as those who don't have access to a desktop computer. So if the global picture is one of a growth in transactions, what do we see in terms of attacks? Well, as I mentioned earlier, human-initiated attacks, and by that I mean an attack that is not performed by an automated bot or script, are actually down overall. But interestingly, hand in hand with that growth in mobile transacting comes a growth in the percentage of attacks coming from a mobile device. So it looks like fraudsters are following the traffic volume. And while this decline in attack rates is good news, it's worth unpicking why this might be. Perhaps fraudsters have turned in a higher volume to some of those government-backed stimulus packages offered by organisations not covered in our network. And this does seem likely, given that within many financial services organisations in our network, we do see evidence of attacks on COVID-19 related support packages. And perhaps too, fraudsters are simply pivoting attack methods. We see, for example, that growth in automation with a growth in bot attack numbers targeting financial services and from many global regions. So I think the next 6 months are going to be really pivotal. What happens to attack levels as COVID-19 related support reduces, for example? So moving on, and this takes a look at which countries contribute the largest volume of attacks to global cybercrime. So for those human-initiated attacks, you may not be surprised to see that some of the largest global economies are also the largest contributors to global cybercrime. So we have the US, the UK, Canada, and other European nations, and they always appear in our top 10 list. Countries like Russia and China drop in and out. But over the last 3 years, we've also seen significant representation from growth economies. So I'm talking about countries like Brazil and Mexico. And last year we had Thailand and Malaysia. And I think this is really reinforcing the fact that cybercrime is a global economy in itself, with much knowledge sharing and even shared services to facilitate success. And if we look at this same pattern for automated bot attacks, we see a similar list of countries, but with more representation for those large economies, with Russia and Australia, you can see, making the list, and there are fewer growth economies. It is interesting, however, that APAC has such a strong bot footprint, with Japan recording the largest growth in bot originations of all countries globally. So moving on, and we're now going to have a bit of a look at transaction and attack trends across the online journey. So in the digital identity network, we are looking at transactions from the point a consumer opens a new account, verifying their identity and device reputation, then tracking their behavior across touchpoints, such as password resets, logins, details changes, money transfers, right the way through to point of payment. And although the majority of volume we see come from the core touch points of new accounts, logins and payments, we are also seeing quite substantial volumes of transactions across, say, ad listings in online marketplaces. So looking at the slide, let's start with those large circles, our core use cases. New account creations continue to be attacked at a really high rate. Around 1 in 7 account creations in the network is an attempted attack. And actually, there is a growth in mobile attacks here year over year. Payments see the highest volume of attacks, and that makes a lot of sense because that is the key point of cash out for a fraudster. But of the non-core use cases, money transfers saw the highest rate of attack. And by this, I mean the movement of money between accounts within the same customer profile. And this is interesting because it is showing the movement of funds from, say, a savings to a current account. And it could be a real key indicator or precursor to an attack of extracting funds. The second highest attack rate is on password resets. Again, a key risk indicator that a fraudster may be trying to take over a good user account. So what we've done so far, we've looked at the global view, and then we looked at the global picture across the customer journey. And now I want to get a bit more granular and have a look at the view by industry. So on a broad scale, if we look at trends first in financial services, as you would probably expect, the key pain points for this industry are new account creations and payments, with fraudsters targeting that point of entry and then that cash out moment. And actually, a similar pattern emerges in e-commerce. Fraudsters targeting new account creations as a way of setting up fraudulent new accounts to then monetize stolen identity credentials and then make fraudulent purchases. And what we'll see actually later in the COVID-19 analysis is a growth in payment transactions during lockdown as consumers migrated online in large volumes, but with some interesting corresponding attack trends. But I'll speak about that more later. The key industry story, however, is in media, which was the only industry to record an overall growth in human attacks during this period. And actually, this growth was recorded across all use cases, and media also saw the most notable spikes in attack rates through COVID. So again, perhaps organisations such as streaming services or social networks or online dating provide perfect test beds for stolen identity credentials. So before we move on to look at the COVID-19 trends, I wanted to finish on this story of network fraud and this incredible complex fraud network that we have visualized on the screen now. So for the past year or so, we have been analysing this concept of network fraud, looking at how fraudsters and fraud rings operate across organisations, industries and regions, and what connections exist between these fraud attacks. It felt obvious to us that this was happening, but we wanted to be able to prove it and quantify it in the digital identity network and help our customers understand how they could mitigate this type of fraud. So what this visualization shows you is a live UK fraud network targeting the financial services industry and operating across 10 financial service organisations. And in this network, we have nearly 8,000 devices, over 5,000 emails, 1,000 telephone numbers. And each arrow illustrates an entity associated with a confirmed fraud event at one organisation crossing over to another organisation in the digital identity network. And the entities we are analysing as part of these networks are device, which is illustrated by the orange lines, email address, shown by red. And hundreds of thousands of these events were associated with a fraudulent entity at the source organisation, like I said, which was then seen at another one. All in all, at least £17 million was exposed to fraud across the entire network. And the Digital Identity Network allows organisations to share intelligence related to stolen or synthetic identities and confirm fraud events, so that an entity that is marked as high risk or fraudulent by one organisation can be blocked by subsequent organisations before further transactions are processed. So now let's dive into the COVID-19 analysis. And as we saw earlier, there was growth in broad terms when we looked at transaction volumes. But what this covers up is some of the sub-industries where we have also seen a decline in transaction volumes as a result of the pandemic. So as you would expect, many e-commerce merchants have seen a growth in new account creations and payments as consumers have come to rely on online shopping in place of physical stores. Likewise, media streaming services and some gaming services have seen a growth in new account creations as people were maybe looking for more things to do from home. Declining transaction volumes have been seen across gaming and gambling operators that rely on live sporting fixtures, travel, as you expect, but also travel review companies and even ride-sharing sites with the reduction in car journeys. And what about things like gift cards and even dating websites, given the reduction in socializing? So the Digital Identity Network also recorded an overall growth in transactions from both new devices and new digital identities, as more consumers were moving online who might not have been digital natives previously. And of course, this really opens up questions about vulnerable customers who may be more susceptible to things like phishing attacks because they're not digital natives. And this specifically plays out very clearly in the financial services sector. And what we're seeing here is a growth in users registering for online and mobile banking at the start of lockdown, indicating a shift from in-branch to online banking. And this was also the case for many e-commerce retailers and media companies who saw an uptick in registrations for new accounts to facilitate things like online shopping and media streaming. It'll be interesting to see where this group of new to digital customers actually remain digital post-pandemic, or whether they stick to in-person transactions given the choice. But what about fraud? I mentioned earlier that fraud rates were down, but we nevertheless saw specific fraud, specifically targeting government-backed support packages. And this example I want to share targeted a series of UK banks. So several of our UK banks were seeing an increase in fraudulent activity on government-backed COVID-19 loans. These were called bounce-back loans. And fraudsters were upgrading consumer accounts to business accounts in order to meet loan criteria, and then applying for multiple loans with the same underlying credentials. Several applications were also linked to known mule activity. So this high-risk activity is being tracked, and using link analysis and rules, we can identify and block this fraudulent behaviour as it happens. So let's conclude by pulling together some of these themes. What's clear from this report is that the digital environment is in flux. Fraudsters are still active and fraud is still rife, but the face of cybercrime is constantly changing, with fraudsters often preying on what they see as the quick wins and easiest targets. Often this involves mass automation and less mature product offerings, as well as targets with less robust security. And I think the next 6 months are going to be really interesting. With government-backed support packages winding down, where will the fraudsters go next? It's likely there'll be a growth in mule activity, and we've already seen this in the network. But it also seems likely that this clear pattern of highly organised network fraud will continue, with fraudsters knowledge sharing and working in a coordinated way to maximise success. What will be key is the ability for businesses to harness intelligence across the entire customer journey, looking beyond static data that can be stolen or spoofed, to layered digital identity solutions that can differentiate between a trusted user and a potential threat in near real time. And that brings me to the end. Thank you so much for listening. And if you have any other questions, please do feel free to drop me an email. Thank you very much.